Okay, we'll get started here in a couple of minutes, folks. We're just getting things set up. Jeff, it looks like we have you on. Can you hear me? Good morning, Jeff.
Good morning,
Can
sir.
you
How are
hear me?
you?
All right, great. Looks like we're getting going here. We'll give it a minute or two. So up to you if you want to stay on mute or hide your video for a minute or two before we kick things off. We'll give folks time to join here. Already have a
Perfecto.
good Okay, we've got some people trickling in here. We'll kick things off in about 30 seconds or so here. Okay, everyone. Well, let's get started here. We're gonna have a couple of people, I'm sure, trickle in, but welcome. And we're gonna make good use of your time here. We try to keep these right at 30 minutes. So, like to make these kind of intense, helpful, and we'll share a recorded version of this. But welcome, everyone. My name is Eric. I'm one of the co-founders here at ExitGuide, and we do monthly webinars, and we interview experts with different perspectives on the exit process. Today, I'm welcomed by Jeff, who I'm going to introduce in just a moment here, and he'll share a bit about his background. But a couple of housekeeping things. One, you'll see at the bottom of your Zoom, app, the ability to submit questions for Q&A. We'll try to get to those at the end. There will be a link sent out for the on-demand version. Some of you have come in from other sources other than through the website. I would encourage you to submit a free assessment that helps you get your account set up, gives you access to a lot more content and information, as well as other premium tools to help you plan and navigate your exit. We are doing a special for some of the services that we offer here in the month of January, and we'll throw a code up at the end. So, let's get started. Here we go. Well, Jeff is someone that I've gotten to know through the industry, and I'm going to have him introduce himself and share a little bit more. But Jeff, thanks for making time today. Why don't you just share a little bit more about your background and how you help small business owners?
Well, so Eric, thanks for inviting me on. It's a pleasure to be on the show and share my my I guess expertise or advice with the audience. Been in the financial services industry for over 30 years. Worked with clients in the financial planning side of the business for a pretty good chunk of that time. And about 10 years ago, my business partner and I started finding a series of clients that we were working with that were business owners. And in a lot of cases, they were business owners that came to us after they exited their business. And what we found was in a lot of instances, they would exit and think that, wow, I got the biggest check of my life. And they hadn't really done any planning prior to that.
Okay.
And what ended up happening was they didn't really get the biggest they may have gotten the biggest check that they got in their life, but it really wasn't big enough. And at that point in time, we as a company and me later on began to really specialize in working with small business owners to help them plan their exits much better so that they were achieving the goal that they had planned for, not the goal that they ended up with.
Great. So we're going to talk a little bit more both about your background and how you help small business owners. Just a refresher, I'm not going to turn this into a sales pitch, but ExitGuide is a service that helps small Main Street business owners go through the process of preparing and managing their exit. And today is part of what we call phase one, which is educate. And so you may have taken a free assessment. It gives you a range of what your business could be worth. This is not a formal valuation. It is not something that you should necessarily use for finance purposes, but it's a step in the process. We also have content, we have videos, and then we host, monthly sessions such as this to kind of help you understand various aspects of it. The next phase, is the preparation. I can't stress enough about how important this is, and this is some of what Jeff is going to cover today in our Q&A session. But 50%, in fact, more than 50% of the deals fall apart during the due diligence process, simply because owners just say, okay, I want to sell my business, and they kind of start spreading the word, but they're not prepared for that process. So once you land on an agreement, a verbal agreement, maybe you have an LOI in place, we do put deal teams in place to help you and your buyer move through those steps in the process. Exits mean different things to different people. So I can't also, want to stress this. it doesn't always mean that you go and find a buyer online or in your local community. In some cases, this may be somebody who is going to sell their business, such as, Jim in Florida, who sold his business to a competitor that had approached him. He was ready to retire. McKinnon, her business partner, actually did an asset sale, and it gave them liquidity to move on to the next thing. In some cases, people like Linda out in New York, she sold her business to an employee. So different people and different businesses have different exits. And, one of the things that we want to help you with is kind of understanding where to start. So, Jeff, you've been doing this a while. Let's kind of jump into just kind of level setting, new year, people make resolutions, they set goals. Give us a sense of, kind of what you've seen, maybe coming out of 2023 and moving into 2024. What does the market look like for somebody who may be thinking about selling their small business?
Well, so I would say there's really kind of two things going on in the exit planning side of the business right now. One, you've got a generational shift that's occurring right now. The baby boomers. The baby boomers are the largest generation in history of business owners. One, there's just more of them. But two, as a percentage of the baby boomer generation, they're almost double the next nearest group. Business ownership's like 2.5% in that group, which is a massive amount when you look at it. Well, they're all getting older. And every day there's about 10,000 more that turn 65. And so they have, there's a lot of businesses out there. And so the natural, I guess, buyers for that group are typically the next generation down from them, which is my generation, Generation X. Well, Generation X, we're the smallest in history, and we hold the lowest percentage of businesses out there. So if you're a baby boomer at this point, you have, there's a lot of you, and you have a very, very small group of people that are buying these businesses. So you've got to make sure that you do planning and you prepare your business for that sale. The other side of the coin, I would say, is you've got a lot of folks that have created online businesses. And, when somebody looks at it, and in fact, I had a conversation with somebody about this yesterday. He's actively out there looking to acquire businesses. And, he's like, I'm looking at some of these online businesses, and he's, either they want way too much, they think more of their business than it's actually worth. And they tend to be much more involved in the business than they really should be when it comes to selling the business off. You're either going to sell yourself into slavery, or you've got to create a business that can be without you. Or the other side of the coin is there's a whole bunch of online businesses that just aren't making money. And so they're not worth anything to an acquirer. So you've really got to understand where your business is. So I think that's where, y'all's software helps right out of the gate is, okay, they can at least get a feel for, okay, this is where we're at. It's not a true valuation, but at least we've got a feel for what the business is worth. And then you have to start looking at, well, what can I do to fix it if it's not enough to be where I'm at?
Got it. Well, so, we've talked about just kind of the overall market, like what is exit planning? And you have a certification. And so, when you think about, listing your house, you work with a broker. That broker has to have a certification, same as somebody who does, financial advisory, which you also have certification. So can you explain a little bit about like, what's the difference between just talking about planning your exit versus kind of that more formal exit planning process?
Yeah. So, I guess I have to look at it from the way I define that. Traditional exit planners typically are going to come in and they're going to, help you figure out what the value of your business is. They're going to help you figure out, okay, what can you do to fix that if it's not what you want it to be and everything else. The way I define it a little bit more is it's a more holistic process when it comes to your business and your financial plan. So I utilize the skill sets that I've been trained in. So, of course, I've got a background in investments and financial planning, but I've also got training and certifications in exit planning. So what I did is merge those together because you can't just go in and say, okay, well, we're going to do the exit planning and then, all right, fine, you're going to get X amount of money. Well, what is X amount of money if that's not enough to support me for the rest of my life? Maybe I've been used to peeling off, a couple $100,000 off of my business every year. Well, I need to make sure I sell that business enough to where I can still generate that couple $100,000. And that's where I say that big check comes in. So, exit planning is everything from understanding what the current value of the business is, understanding how owner-centric the business is, which is a major factor with small businesses. So many of us started our businesses and effectively in the garage, and even at $10 million, we're still acting as if we're, operating it out of a garage, and we're actively and, intimately involved in every decision. So you need to understand that owner centricity. You need to understand who the backup team is. We go through an exercise that I was taught where we literally go through every single role inside the company. So everything from who makes the decisions on financials, who's responsible for X, and Y. And we walk down that list and say, okay, well, who makes the primary decisions here? Well, I do as the owner. Okay, great. Who's your backup team? Well, I don't really have anybody. It's a backup team. Okay, it's a problem. Okay, here's, financial decisions. Who does your taxes? Well, I do. Okay, who's your backup team? Well, I don't really have one. So you just walk through that list, and that helps to identify how owner-centric the business is. And that's the biggest problem with small businesses. If you're massively owner-centric, if somebody's coming in to buy the business, they're typically going to be an acquirer who's not looking to buy a job. They're looking to buy a functioning business. And so that's one of the things that you need to start working on early on. And the earlier the possible, you don't want to wake up at, January 1st of 2024 and go, you know what, I'm going to sell my business in 3 months. If you've not done any planning, I guarantee you are not going to get top dollar for your business as much as you think you will.
So on that owner centricity, before we kind of move on to the next topic, what are some of the things? I mean, there may be people listening to this who are going to say, that describes me. Okay, now what do I do? Like, what are some of the things that you've seen owners successfully do to kind of, move away from that owner centricity or that kind of owner dependent model? I mean, practically speaking.
Yeah. I mean, the biggest part of that is identifying all those different skill sets or roles within the company, and then starting to look at, okay, who's on your team that we can transfer some of these responsibilities to. And, okay, I'm going to, the financial part, I'm going to hand off to my accountant, maybe, or maybe somebody inside the company, because we want to maintain the reins a little bit on the financial side. Maybe I need to hire somebody. Maybe I have somebody that could do this, but do they have the skills? So you need to really start looking at each of those roles and saying, okay, how do I, the best way I put it is, how do I make myself as irrelevant as possible in the business? Which is a hard thing for business owners to do. But the challenge is, and this is a big problem for a lot of the businesses that are out there of the baby boom generation, they've been so used to that work hard philosophy. And unfortunately, the generations who are in the purchasing seat have grown up with, hey, let's figure out how to make this much more efficient, or I don't have to buy a job. I want to buy a functioning business. And that's the differentiator if you're trying to sell your business today from everybody else that's out there, is you got to make sure that is a functioning business. You've got people in those chairs, the right people in the right chairs. And in addition to that, you've got somebody that's kind of in that, all right, if that person can't do it or is having trouble with it, there's a backup player on the team as well.
Great. And I know that's something a lot of people, kind of struggle with, which is, this is the way I've always done it, and just work harder or add an extra hour or two. So we talked a little bit about just kind of the strategic aspect of this. Let's get a little more tactical. I mean, as ExitGuide, we always like to say, like, we like to combine technology with experts. And so practically speaking, what are the things, if I'm sitting there this weekend and saying, okay, I need to start getting organized, what are the things that I need to do, early in this process? I mean, before I go talk to somebody, whether there's somebody's expressed an interest or I'm going to contact, like, what do I need to gather?
Well, I mean, if you look at your chart that you have up on the screen, that second one in financials, you need to have somebody that is knowledgeable about business sales. So you need to find a CPA or somebody along those lines that understands financials, that can review your financials, because the first thing that can blow a deal up, they're going to start doing due diligence, and the first thing they look at is financials, and that is the canary in the coal mine. If, and I've had this happen where I've done valuations for people, and, first step in the process is, okay, you got to send me your financials. And, either it's, well, I don't really keep them up to date, or you get them and you read them and it's like, okay, something's hinky here. This does not look right. I look at it from a buyer's perspective. And so I'm looking at from that. So before you even think about putting anything out there to the public, you got to make sure those financials are solid, because that's what they're going to look at. And the more, what I would say is, the more professional the buyer, the more important this becomes. If you're selling it to another, let's say a family member or an employee or something like that, depending on their background, they may or may not understand the financials as much. But the more professional a buyer, if it's another business owner, if it's private equity, you have got to nail the financials. There can be no second guessing. There can be no anything like that. And then, then you start working around with, okay, when they do due diligence, they're going to be looking at all of your contracts. So you need to make sure you've got all of those, those things that get pushed into an email account or something. You're going to need to know all that, because they're going to want to know, well, what's your lease look like? Or, if you own the building, what's that all look like? If, you've got contracts with printers and all these different contracts, you need to make sure you have those available, and you need to make sure that they're all current and up to date, because that's another thing that a buyer is going to want to know.
Yeah. And we've talked about this, before, and it's a common, analogy. I mean, this is not all that different, from a thought process of selling, a home or a condo, townhouse, which is, you don't just wake up on Saturday and stick a yard or sign in your yard, right? You got to go through, like, are there repairs that need to be done? Are there, things that need to be addressed and updated? And, are you current with your, like, all these things that need to go. And it may seem like you can do that after you put the word out and talk to a buyer, but it oftentimes it can be a bit of a mistake. And we'll talk about some do's and don'ts, but kind of, all right. So let's say someone has gone through that process. They've kind of done some planning. What should they expect? So someone who's listening here is probably thinking, okay, yeah, I got a feel for it. A lot of businesses are going to come on the market. I need to start, thinking about, how to prepare myself. Okay, what happens when they email 10 people and 2 come back? What should they expect?
Well, I mean, what's going to happen is, I mean, typically at the beginning of that process, the lawyers are going to be engaged as well. Initially, you're probably going to have some conversations just with that person that's reached out to you. They're going to want to know, okay, what's your thoughts on price and everything else. So you really need to know that up front.
Yeah,
So you've got to make sure you've got that value in your head up front. And then you need to make sure, I mean, it's a negotiation. So you need to make sure that whatever that value is in your head, that this is the minimum I can accept, you're jacking that up a little bit, because they're going to want to wheel and deal with you a little bit on top of it. The other part, you may ask for a certain figure and they may go, oh, okay. And you're like, crap, now I didn't really have to negotiate. That meant they were willing to pay a lot more. So you really need to understand the value of where you're at before you have those discussions. The first part is typically going to be kind of a get to know you. It's like dating. It's a little bit of a get to know you. You're going to see if that's a person that you would be comfortable selling the business to, because, you're giving behind your baby that you've built, plus your team that you've built. You have a responsibility to them, or, you should have a responsibility or feel like you have a responsibility to your team. to make sure that you're putting them in the best situation possible, that you don't sell the business and then that person turns around the next day and fires everybody on the team because they just wanted the name. So you want to get to know them and be comfortable with that person, because the other side of the coin is you are going to spend a lot of time talking to these people. And it's going to be very frustrating. The process takes way longer than you think. I know this is a fact because my business, I sold my business in 2022, or one of my businesses in 2022, to my business partner, who we've been friends for 12 years. And, the good and the bad of it is when you're friends with somebody, it's wonderful. And it's like, okay, well, I want to move on to do this. You're going to take over the business and all that. But all those little animosities that you have, or those times you annoyed each other, are going to come up. All those hard feelings and things like that are going to come up, and it's just going to not be a fun situation. I think in some cases I would have preferred to have sold it to somebody outside, because then I wouldn't be pissed off at somebody I love to death, but you want to make sure you're first off comfortable with them. Then typically that's when either an exit planner or lawyers get involved, and you're starting to negotiate what that looks like. During that process, they're going to go through due diligence. So you're going to sign you're going to have them sign a non-discretionary or non-discretionary agreement, NDA. The whole purpose of that is, you're basically putting everything out there, and you don't want them to go out there and say, oh, okay, great, I'm going to do all this. Now I'm going to go tell your biggest competitor, all the problems with your business and everything else. Then the really uncomfortable part happens. After you've done that and the due diligence process starts, they're going to start asking you for a lot of personal stuff, your financials. They're going to want to know everything about the business. They might even want to come in and interview your employees and understand more about the business. They may even, they're not talking to clients at this point, because you don't want to let on to your clients that all this is going on. You want to keep this really tight to the vest. And in some cases, if you're not sure about the employees, you probably don't even want to let them know. And you probably would tell this person, no, you're not going to talk to the employees until we have a more firm deal at that point.
And then one thing, I'm sorry, go ahead. I had one last question.
And I would say then it's just going to be a long, really painful process that you're going to get really mad about. You're going to be very frustrated. They're going to be telling you, they're basically going to be telling you your baby is ugly. And, you kind of have to hold that in check. You're going to,
it's part of the negotiation, right? Yeah.
What?
That's just part of the negotiation, right?
Well, it is. I mean, it's part of the negotiation, but once again, you've probably never had anybody tell you your baby is ugly before. And now it's like, okay, wait a minute. What you're telling me my baby's ugly. And in a lot of cases, then it gets down to the reality of, okay, now you've negotiated a price. They're going through whatever financing. Maybe they're paying out of cash. Maybe they have to get financing. That always takes way longer than you would have expected. And then, comes to the end, and here's where a lot of the deals blow up. It's all of a sudden the reality. And if you don't do good exit planning with the reality comes up. Oh my God, what am I going to do now? And part of the exit planning process is talking about what that next step is for you. There's a stat in the industry that says 73% of business owners that sold their businesses are unsatisfied with that within 18 months. And many of them go back to work. Many of them start another business because they didn't really think what the next step was going to be. They don't have anything to fill that space of 60 or 70 hours a week. And, the thought process is, well, I'll travel and I'll go play golf. Well, there's only so much golf you can play. Then, if you haven't had much of a life prior to selling your business, chances are you're probably not going to have much of a life after selling your business. And then you're just going to be bored. And then it's going to be, well, I'm going to go start another business.
Yeah, I like to refer to that as the border collie syndrome. And, some people need a job or they chew up the furniture. So, Well, let's talk a little bit just kind of as we're getting closer to the end of our time here.
Mhm.
Just what are some of the do's and don'ts? I mean, we've talked a little bit about the strategy, but like you've been around, this for quite a while.
Mhm.
And if we were just, kind of connected at a cocktail party and I said like, what are the just things you could just shake your head at, or you're like, when people do this, it's just
Yeah.
great. What are the things people can kind of take away is just like, you know, very practical things
Yeah.
to avoid and to do.
Yeah, well, I think the biggest things, especially thinking forward to 2024 from a financial advisor perspective, we've gone pretty much 10 years without a major recession.
Mm,
So, I mean, we
yeah.
had a little minor one during COVID, but I mean, that lasted like 3 weeks and it was back.
Yeah.
And, everything was back on track again. So we really haven't had a big wallop of a recession in a while. The Federal Reserve, jacked up interest rates to, rates, business rates of in the business world, SBA rates are upwards of 7.5, 8, 9% in some cases, depending on your credit. So you got to understand that the affordability for somebody acquiring a business right now may not be as high as it had been. So that is going to have some effect on the pricing
Okay.
of your business, the affordability of those deals. The other side of the coin, some of the biggest don'ts that I have, one of my rules is I will not deal with a client whose intention is to sell their business to family or an employee. Just straight up, they finance 100% of the deal. We don't
Mm,
play that game. They're
okay.
going to have to come up with some kind of skin in the game, so to speak, to make that transaction happen. The reason for that I've seen it happen more times than not, where somebody didn't get money up front. Let's say the kids take it over. Now they've been, and this is usually what happens. They've been that hard driving, I'm going to control everything. And, the kids, yeah, they may have grown up and worked in the business their whole lives, but they've never truly been prepared to be the business owner. And
Mm,
mom or dad never stepped back from the picture and let them run the show. Then all
yeah.
of a sudden one day they went, okay, I'm done, I'm out. And now the kids are running it and they're not prepared. They're not ready to run it. They've never been allowed to make decisions for themselves. And mom and dad go off and start vacationing and having a good time. And, a year later, the business is on hard times now. The kids are running it into the ground. And what happens? Mom or dad has to come back into the business to fix the problem. And the whole solution is not there.
Yeah.
So we make sure, one of the things I'm adamant about is we make sure that they have skin in the game. They've either had to get a loan for part of this. Ideally, one of the things we do is help them, if we've got enough time, maybe 7 to 10 years, we've got enough time to build kind of that purchase mechanism into the business using some financial techniques to where it's a guarantee. I mean, that money's in the business. The kids have control of it, but they can use that as a purchase mechanism, and it's a liquidity factor for the owner.
Got it. Wise words, and appreciate you sharing the
Mhm.
the wisdom. So, in the last few minutes, I'm going to circle back. If you have questions, click on the Q&A. I've got one or two here that I'm going to pose to Jeff at the end. But as I mentioned, you may have seen some emails from us. We have a couple of things. We talked about the learn, stage, which is your assessment. It's the range of what your business could be worth. It's webinars, it's articles. These are some of the things that we're trying to give you to do and educate yourself on the process so that you're prepared. There's coaching sessions. There's people like myself or Jeff or Brian Walters, who's a valuation expert, and Patrick McMillan and others who are on our platform that can spend an hour with you. It could be just general, hey, I need to talk this through. I need a thought partner. There may be, hey, I've got specific questions around what to do post money, post retirement, or excuse me, post selling my business and how to move through that with someone like Jeff, or things around valuations, which is, okay, I need something a lot more robust than than what the assessment is delivered. So we have everything from coaching sessions to a valuation report to speaking with a valuation expert, and as well as a sell sheet. One of the things that people don't think about, which is, well, okay, I want to start telling people my business is for sale. What do I do? And look, online marketplaces have their value, but if you have a hyper local business paying to reach eyeballs that are dozens, hundreds, if not thousands of miles away, is probably not going to be the most effective, spend and use of your money. So, think about who you want to reach. And then, a sell sheet is a great way just to present your business to someone so they look at it and it looks professional, right? And then when you're ready to move through the transaction, this is where you bring a deal team in. So again, it's folks like Jeff and Brian and others who are on demand and working with you to kind of make sure that transaction goes from, okay, we think we have an agreement here, to what is the structure of that agreement and what are the things that we need to put in place. Jeff talked a little about, seller financing. Okay, maybe you're going to do seller financing for 70% of this. Okay, that requires a seller note. What's the interest rate? What's the loan term? How long are the payoffs going to have? What happens if a payment is missed? So these are the things that you'll want to have access to experts who can answer these questions and help you structure it properly. And that's our guided exit, which is that kind of final stage in our 3-step process. So it came up here, Jeff. I mean, and I'm going to take 2 questions and combine them. But can you talk a little bit more about how these deals get financed, and like, SBA loans, seller financing, personal guarantees and loans? I mean, like, what should people think about is their options for when they want to, sell their business? What do they need to think about in terms of what the buyer needs to have in place?
Yeah. And I mean, I think, in that case, there's going to be multiple different ways that it could be financed. Typically, if it's, let's say, a larger acquirer, let's say that, there's a major national player that wants exposure into a market that you're more of a regional player in, they're going to finance that. And, it's either going to be from a bank loan that they get. They might just finance it out of cash, out of one of their divisions or something along those lines. So that's a pretty simple one, because you're really not involved in that. They've got to come to the table with it. The smaller the acquirers, let's say I'm somebody that's out there, I've maybe wanted to be in the health and wellness business, and I could either build it or I could buy it. And so I want to buy yours. In those cases, let's say the deal is under, several $100,000, maybe under $1 million. It's going to be an SBA loan in most cases.
Okay.
You're going to go, that acquirer is going to go to their local bank in most cases that does SBA loans. They're going to go through the process. An SBA loan, if you've never been through that process, if you think the due diligence process was bad, wait until you deal with the government, because the government, I mean, literally, it's like, well, wait a minute, you have a small, $3 account at this place. We need statements on that. I mean, they want to know everything. And in an SBA situation, 9 times out of 10, I'd probably say 9.99 times out of 10, that person is going to have to personally guarantee that SBA loan. So they're going to have to be somebody, not just their business, but they're personally going to have to be on the hook for that. So the higher the amount, the scarier it gets in those cases. If you are selling to somebody internally, most of the time, let's say a kid, one of your kids or one of your key employees, 9 times out of 10, they probably don't have any money to do this. And a big part of an exit plan is to create liquidity for you, because your liquidity has been trapped in this company for a long time. This is why I say, if you have enough time to do some planning, you can create some vehicles inside the company that can provide that liquidity. So you can kind of take from the cash flow of the business and put some money aside that is, basically the employee, they could say, well, I want to just take this as a, a supplementary retirement, or I want to use it to purchase the business. In that case, when they use it to purchase the business, it's your money and you get to take it at that point. So that's a way to kind of fund part of that. And then you can also take back a note. I know when when we did our business sale, we did a partial, I took a chunk of cash out, and then we did a partial note on my part, over a period of years. The good part about that is it's not as big of a cash flow or a cash hit on the business right up front.
Okay.
The other good part about that is then you can stretch the rest of that payout out over a period of years. The risk that you have is if I float that note, or if I carry that note and they run the business into the ground, that money can go away. Typically, your attorney is going to structure something in the deal that says, okay, if they screw it up or if they miss payments, you can basically step back in and own the company again. That, the deal is null and void.
Which may or may not be desirable. One more question here, and I want to kind of respect everyone's time.
Yep.
Related to this is, can you transfer an existing SBA loan to another person? Is that, and maybe, I don't know if you can answer that or not.
I don't know for sure. I mean, it's more of an SBA question. I would say it's most likely you would be able to. I know, like because we did some of the financing through the government when all the COVID crap was going on, and we were able to, but it took a while to do that. And remember, an SBA loan isn't a loan through the government. It's just the government guaranteeing a portion of that loan to the local bank. So it's really up to the local bank, because they actually own the paper at that point, is if they'll allow it. In most cases, they will, if it's an ongoing concern. If they feel like, okay, well, this is already a running business, we know what the history of it is. Okay, somebody's coming in to take it over. They're probably still going to go through a pretty in-depth, okay, let's make sure we understand who the new folks are. Okay.
And there's a couple, 2 or 3 more questions. Let's try to get through these pretty quickly, just to respect everyone's time. What if I have multiple parties interested? Do I want to talk to both, since one may fall through? I mean, look, I think the answer is yes, and you want to keep that going. I mean, at a certain point, you need to probably decide who you want to allocate your time with, and in some cases, a buyer may force you to make that decision, which is, hey, I want a no shop clause. I want to know that we're now negotiating in good faith here. Anything to add to that?
I mean, I think the smaller the business, the more the more options you have as far as who you're going to sell it to. I mean, I'm fine with that. I mean, I look at, once again, they've all signed an NDA, so they can't, share that information outside, or you sue the living tar out of them at that point. So having a couple people that are competing for that business, I mean, the more the merrier in those cases. As the deal gets larger and larger, it's probably less likely that there's going to be competitive bids that are out there. Correct. Unless they are unless they've actually come to you and said, hey, I want to acquire your business, and then somebody else did the same, or you kind of have floated that out there and you got acquirers coming in, then there might be a little bit of competitive bidding going on. But it eventually gets to a point where, okay, this offer is not going to be good, we're going to go down this route, and you're still kind of negotiating the deal, but you're negotiating the deal now just with that one party.
Okay. Last one, we'll wrap up here, and kind of to tie that one off, like, use common sense. I mean, you don't want to necessarily play people off of each other to the point where it's going to crater the deal. You want to validate that somebody is actually a qualified buyer. I mean, just because someone says, I'd love to buy your business, that may not necessarily mean they're capable or ready to do that. So this last one here of selling internally to employees, do you do anything with succession planning or structuring the partnership? I think I know what you're going to say on this one, but try to give us your. I mean, pretend we're on the radio here. Your last 60 seconds before we have to go to a commercial break.
Here's the thing. One of the things that small business owners love to do is they'll come in and say, okay, Bobby, I think I want you to take over this business. And they kind of infer that at some point there's going to be like them buying into this partnership or something like that. You want to avoid that as much as possible. You want to avoid you don't want to go that route of and inferring that, but 2, the more people that are involved in this transaction, the more complicated it's going to be. If you're going to sell the business, and let's say you've got a silent partner in the business, you best figure out how to buy them out beforehand before you do this, because they can crater your deal. Same thing if you added people in as partners, or you've sold, you've given them shares of the company or something like that. Now all of a sudden it's hard to get rid of them, and it's a harder, negotiation situation. I would look for other ways to do it. That's why we do some things behind the scenes that create an ownership like situation where they're not actually an owner of the company.
Okay. So, if we didn't get to your question or you think of something later, feel free to email me, eric@exitguide.com. I want to thank Jeff and for spending his time with us today. Jeff is one of the experts on our platform. You can book a coaching session with him through the platform. And on that last note, one of the steps in that process in your dashboard is the transition. So the deal doesn't end necessarily, the day that money hits your bank account and, everybody is popping champagne. There may be a period of time where it's, best for the business, best for you, best for the buyer to have you work within the business during a transition period. So a lot to think about. We will be hosting another webinar in February, so keep an eye out for that. And if you have questions, certainly do. Feel free to email me, eric@exitguide.com. And Jeff, thanks again. Any final thoughts or parting words before we
I think we
wrap up here?
covered a lot. What
Great.
I would just tell people is the sooner you can start thinking about it, the better. If there is an exit for everybody. 100% of small businesses, there will be some kind of an exit happening at some point in the future. So the sooner you can start thinking through and planning with somebody that understands the process, the better. Because you'll have a better end period.
Wonderful. Well, Jeff, thanks again. Always good to chat with you, even if it's in front of a group of people and not just having a cup of coffee. But thanks for everyone who attended. And again, reach out if you have questions. Have a great day.
Awesome. Thank you.